Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 23rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Got a lot of economic data coming out today, mostly across the pond. The stuff here in the United States isn't as important, but we got the flash PMI numbers coming in from overseas. Now that's their Purchasing Managers Index. It's one of their most important numbers on the PMI side. We did get the flash PMI numbers here in the United States, but remember our Institute for Supply Management PMI numbers are more widely looked at and higher and in higher regard. So keep that in mind as well. And that's the ISM PMI here in the United States. Anyway, we got the French manufacturing PMI came in at better than expected at 55, expected to be 54.1. We also got the French flash services PMI came in at 55.3, was expected to be 57.1. And remember, anything above 50 is expansion, anything below 50 is contraction. We didn't see any contraction whatsoever, albeit we did see some of the numbers miss in a sense on what the estimate was supposed to be. And the German flash PMI came in at 59 as expected. The flash services PMI came in for the German side 53.7, expected to be 55.4, and then the European flash manufacturing PMI came in at 57.3. The flash services PMI, that was the flash manufacturing PMI for the European region came in at 57.3, expected to be 56.9, and then the flash services PMI came in at 54.7, expected to be 56.2, so slightly lower than expected there. Then here in the United States, we did get our manufacturing PMI on the flash estimates, expected to be 53.1, came in at 52.1, and the services PMI for the flash index came in at 53.0, expected to be 53.9, so ours slightly lower. Then we got new home sales, again, did very well, came in at 610,000 units, expected to be 599,000 units. That was, lockstep with the existing home sales. We saw better than expected. And then they also revised last month's number up to 593,000 units, and it was previously reported to be 569,000 units, so much better on both of those two fronts, especially with that revision on the new home sales from last month. So new home sales and existing home sales doing very well. Buyers getting out there. Maybe the last rate hike kind of spurred people, get them off the porch and start really looking to lock in a new home if they were renting and things of that nature. So people starting to get out there and look for new homes. Plus summertime has a tendency to have more home sales, I should say. People have a tendency to buy homes in the summer rather than in the winter. So it's not really too surprising that we're seeing good home sales because it is summertime and very cyclical. On to crude oil futures, moving higher back into that $43 a barrel mark. Did kind of slide yesterday, but found support on that fib level. I still say the line in the sand to keep an eye on is that $43 psychological level for crude oil. I've actually added some XOP to my portfolio, as I talked about, looking to get a little bit exposure to the upside in crude oil. I think it's just had a little bit too much of a sell-off in here, and we should get maybe a little bit of a bounce. So hopefully we'll see that happen, but I'll talk about that here in a minute. Gold futures moving higher again today, up $7. Right there at the point of control, the value area where most time and volume's been spent. Something to note here, I mean, this is atypical of a bullish move. I'm really struggling with getting long with gold right now. I just don't think that it is the place to put money. I think that with the existing home sales, most of the economic data points coming out pretty good. Not robust in any stretch of the imagination, but doing well, trudging along. I just don't see that money should be put into gold, so I'm kind of fading that one. I'm not really, I shouldn't say I'm fading it. I'm just not buying into the hoopla, if you will. Bonds basically unchanged on the day. Inside day for the bonds. I've talked about this. I think bonds are overdone to the upside, but we are looking at this golden cross, I think they call it, when the 200-day and the 550-day crossover, but that is usually atypical of a momentum shift, whether it be to the downside like this or to the upside, where if we see these cross, that is very bullish for bonds. I'm not really seeing that right now, just with the economic data. It's not really supporting that thesis for me. Dow Jones Industrial Average up slightly on the day, really looking like it's kind of finding a bottom here. It's bounced below that 9-day moving, the 9-day moving average today. Earlier on, off the economic data points, we really kind of started getting a little bit of a lift. One thing to note, we do have FOMC member Powell speaking later on today, right around 1 or 2:15 Eastern. So one other data point to keep an eye on. Then with the NASDAQ also higher on the day by about 16 points. But again, the whole thing is really feeling like an inside day. We'll see that more show up in the E-mini S&Ps as I have that down on a breakdown on a daily chart, 30-minute bar chart. But one thing to note here, big rally, looks like it could be a top, but anytime you get these two kinds of dojis kind of counteracting one another, that has a tendency to signal a continuation. So as of right now, those two opposing dojis is a continuation pattern set up. Then the E-mini S&P is up slightly on the day, as you can see, just over 5 points, and the day two getting back above that 9-day moving average. It's been trading lockstep right along with that 9-day moving average as of lately, so nothing really to see there. This is what I was talking about, very inside day. All of the point of controls lining up very nicely. We did end up extending that to be a bit of an outside day, but the way to trade this again is if this kind of settles inside this value area high of yesterday, it's going to look to want to go down there to test the value area low, and that's just generally the case. Kind of did that overnight with this one, trading on the previous day's value area high. Talked about that yesterday while it was happening. Never actually happened, just kind of traded sideways throughout. I would guess there's going to be a rush to the Hamptons again today, where we're going to start to see volume really start to slack off here in the next couple of hours, and the market just pretty much trade sideways or rally off of lack of volume. Don't really see it really breaking down too much without any economic data and or anything really going on, unless Powell really throws a wrench into the gears, which I don't expect to see. All right, on to a few things that I talked about. I talked about this mentioned this with my crude oil chart /CL. XOP is the ETF for crude oil. They move pretty much lockstep. XOP can be a leader or a lagger in a sense, but for the most part, the charts kind of line up pretty nicely. And as you can see here, we made a bottom down there at 30. The low is 29.9, but let's call it 30, just as that broke below for just a second. That 30 is going to act as support. So I decided to sell some puts in there. We have pretty high implied volatility in there. It's above 40. Anything above 30 for an ETF is usually where I kind of draw the line on selling option strategies or selling options on or option strategies, collecting a credit for these type of ETFs. So it fit that rule. So I decided to go into the July, sell the 29 puts for 48 cents. So I got a nice little credit there. It's not quite below it is below. I don't know why I said that, but it is below this low of 30. So, I'm another dollar below that, and then with the credit, I'm another dollar. So basically $1.50 below that low for all intents and purposes. I think that gives me some pretty good wiggle room to the downside. So if we can get a little bit of a bounce here, then I'll be looking to cover that for about 50% of my max profit. Maybe even if we get a rally, some of that volatility will come out and help me achieve that goal even quicker. So looking for at least a bounce in crude oil for right now. Then on to ULTA. ULTA is looking like it's found a bit of a bottom. Usually I have a tendency to, when they break down into this value area again, it's going to want to go down there. ULTA has just been crushing it. It's one of the few retailers out there that are still doing well, and that has to do with the fact that ULTA is a women's beauty product. So women have a tendency to be the ones that like to go in and shop, and this is one of those products where it is very closely related to that person. So they will go in there, try different products to see how it looks or feels on their skin and things of that nature. And another thing is with women's beauty products, those are reoccurring purchases from the retailers. So if they've done well in the past, people like their products, they're going to have a tendency to buy those products again. And ULTA does a great job at that. So I'm kind of thinking that this is a little bit overdone to the downside. So I added some long deltas to my portfolio with this and sold the July 260 puts for 90 cents. Now that's another great thing with this. I have a lot of room to be wrong, another $25 to the downside before it really starts affecting me. So you get a nice big chunk of premium for ULTA right now with a higher implied volatility. I should be able to be out of this well before their next earnings cycle. So at the end of the day, I think we're going to get a little bit of a bounce here and be able to achieve some of that max profit before I have to worry about it too much. And like I said, I mean, I'm below where the point of control is. So I have several volume nodes that are going to act as support on the way down, and even this 200-day moving average. So not super concerned about that trade. I'm going to have to keep an eye on it, obviously, but that's set up nicely with the charts and being able to get a nice credit for that. And then on to Texas Instruments. Again, took an opportunity to add some long deltas. Again, it did break below this value area high. One would consider it going down here. I don't think Texas Instruments is going to do that. It's really building out a volume node here in and of itself. So even though this is the value area high, this is where price is starting to be accepted. So I decided to go in there, even if it just kind of trends sideways here. I'll be able to get that theta decay for Texas Instruments, and went into the July and sold the 77.5 puts for 86 cents. So nice little credit there. And those 77.5 puts, well below that volume node. I'm going to have to be diligent if it gets much below here, but I think that we found a little bit of bottom. It looks like some volumes coming back into Texas Instruments, so looking for a little bit of a move there. A trade that I covered today was Applied Materials, ticker symbol AMAT, and with Applied Materials, I had on the July 40 puts that I had originally sold for 45 cents, bought them back today for 22 cents. That bit of a move today. It's finding nice support along this 50-day moving average. Got a little bit of a pop. Those 40 puts, well down here. 50% of my max profit's my target on that. So pulled out of some of those short deltas, add a lot more long deltas. So now my overall portfolio is getting balanced towards long deltas. And speaking of long deltas, we're going to be talking about ways to add long deltas in today's webinar with the Poor Man's Covered call. So check that out. It's going to be a great strategy to add something to your portfolio as if it were a stock. You're not going to get dividends and things of that nature, but your return on capital is going to be much higher with this strategy than it would be if you were to go out and buy calls, or buy a underlying and then start selling calls against it. Plus, the perk with this one is we're going to have a synthetic put embedded into this strategy so that we can limit our risk to the downside. So go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.